Welcome to the CU 2.0 podcast.
Hi, and welcome to the CU 2.0 podcast with big new ideas about credit unions and conversations about innovative technology with credit union and fintech leaders. This podcast is brought to you by Quillo, the real-time loan syndication network for credit unions, and by your host, longtime credit union and financial technology journalist Robert McGarvey. And now, the CU 2.0 podcast with Robert McGarvey.
Here's the bad news. AI today is more of a promise than a working reality at most credit unions, says Alex Jimenez, a consultant with Backbase, which helps FIs achieve more and better consumer engagement. But then Jimenez has plenty of very good news for credit unions. He insists their size gives them exceptional advantages when competing with far less nimble mega banks. Do not think smallness is a liability. It just may be a winning advantage, says Jimenez. Along the way, Jimenez talks about genuine use cases where AI is in fact bringing real results to credit unions. And he insists that the AI toolkit in credit unions is going to get much bigger, much better, sooner rather than later. Keep watching this space. Very real results are coming. Listen up. So we're going to talk about Backbase and AI.
I mean, we can talk about in general about what's going on in the industry and stuff. I mean, we're a digital experience platform, so I have tons of opinions about what's happening in the industry.
Good. Yeah, and I was looking through a bunch of Backbase stuff, and a claim that was made was that today's banking customer or member, in the case of credit unions, wants personalization. That traditional institutions are failing to deliver that due to some flaws built into their existing systems. And Backbase says it has some tools, AI tools included, that can help resolve this problem. Can you elaborate on that? An interesting claim. I don't think my primary credit union knows squat about me, actually. They know my FICO score.
Yeah, exactly.
What we do, and that's rear view mirror stuff. It's not forward stuff.
Yeah, so. It's certainly something that we're investing a lot of time and resources on, but we don't have stuff that's coming, but it's not there yet.
You're in the same boat everybody else is in.
Yes, exactly. Everybody else. Yeah, the thing is, like, everybody...
You're being a little more honest, actually.
So beginning of last year, we said, look, AI, we don't believe AI is ready yet for prime time. And then we need to give it time. But our clients continually kept asking us about AI, continually kept asking us about what we were doing. And so we felt that we actually needed to take a more bold and forward stance. And what that meant was that we went out and opened a center of excellence of AI and hired a whole group of AI developers out of Vietnam. And we have a center of excellence in Vietnam that is doing that is working on AI and how to make it part of our platform. But it's still really early days. The early things that have come out of that are really basic and are not, the kind of things that you would hear OpenAI or Google claim that it's possible now, right?
Right. And the financial institutions, credit unions that I've talked to they're actually looking for, I'd call them fairly minor, trivial proof cases of AI working, which I think is smart. Yeah. If they're trying to wrap their arms around solving all global problems with AI, it's too early.
Yeah, exactly.
But if you can do something like integrate all your customer-facing manuals so that a call center employee can easily access the answer to a question rather than trying to flip through 24 different documents.
Absolutely.
Which are contradictory in many cases. So.
Absolutely. Yeah. That's that use case that I continue to talk about, that exact use case. That is something that can help today, right? And it's available. And it also mitigates the issues and the risks of of a large language model hallucinating the answer, right? Because the agent can say, "Wait, this makes no sense."
Right.
Right. Yeah.
Well, Google's been candid about hallucinations, and their argument was that this didn't occur very often, and it usually occurred in cases where the available data was poor.
Right.
Which makes sense to me. The machine says, "Hey, it's like a kid in ninth grade. Oh, I don't know the answers to that question, so let's just take a stab at it."
Yeah, exactly. I might get lucky, right? Yes, exactly. Yeah.
So I've used Google AI a lot, and I've not personally seen a hallucination. So I'm not saying it doesn't occur, but
I use ChatGPT, and I've seen quite a few.
Well, but the other thing I tell people, and tell me if you disagree, is that what you know about AI today will be different a week from now, because
Yes.
the investments are unprecedented in the history of technology. Billions and billions and billions of dollars pour into ChatGPT, and they're not spending all that money on Ferraris.
Yeah. Yeah.
And
it's true.
And Google has who knows how much money pumped into AI.
Yeah.
And so I've never seen this level of improvement week by week. And it's quite exciting. Does that mean it's ready for prime time in a credit union? Not so far as I can tell, not with all the razzle dazzle. I mean, there are these individual use cases that seem small, but potentially important.
Yes, exactly.
So it's now when you tell clients that, do they go, geez, I got to look for another consultant to tell me what I want to hear?
Well, I mean, and there's plenty of them out there. And the problem is try to do it, right? And the bottom line is you have to have your data in a position that can be used by a large language model to appropriately give correct information that is actionable. And most credit unions, most banks don't have anything like that, right? We spent tons of time in the past, 15 years trying to put our data into a data warehouse. And then we were told that we needed a data lake. And for those of us that are not technology people, we're like, what does that mean? How is that any different, right? And so, we spend tons of money on data scientists and consultants and so on to get our data cleansed and all of that. But it just hasn't happened yet. And a majority of banks and credit unions don't have the data in a place where it can be, fully accessed and it's actionable. And
fascinating. That was the problem a dozen years ago when credit unions were jumping into what they called at that point big data projects.
Yes.
And consultants told them, well, we have this magic pill called Hadoop. You shovel data in, and Hadoop can digest anything. Hadoop is a wonderful tool, but it puked out a lot of the data that was shoveled into it because it couldn't work magic.
Right, exactly right.
And I'm not faulting Hadoop at all. It's what the credit unions were told Hadoop could do that was wrong.
Yeah. And just real basic stuff. What's the balance in my account, right? From a customer standpoint, that's easy. You know what it should be, right? It's how much money do I have in my account right now? But our core systems have 10 different fields that tells you what that is, right? So how much money you have today at this moment, how much money you're going to have at the end of processing, how much money on average do you have? The balance is not a simple question. You might think it's a simple question, but then you have, like I said, 10 different fields in your core that tells you what your balance is. One is the correct one for what a client is asking. But if you just throw it into a data lake and say, figure it out, chances are that it's not going to figure it out all the time. It's a mess. It's just the way that we as financial institutions have managed data, have stored data. And it's funny because the credit unions and community banks actually should have an easier problem because the data generally sits in the core, and we have a single core. When you start looking at the bigger organizations, the regional banks and the national banks, many of them have more than one core, right? You have the credit core, the loan core, and the deposit core, and sometimes are not the same, or even might be the same but are different versions. They don't talk to each other, and so on. So they have an even bigger challenge, but it's still a challenge because it's the core systems were not designed to be a database of all the customer data, right? I mean, at the end of the day, a core system is a ledger, and all the things that we put on top of these core systems just have made things more complicated. And so when we try to do things with these cores that are not what the systems were designed for, then you have issues, and that probably addresses like 80% of all the technology issues we have in banking. we have all these systems that are used for various things, but they were originally not designed for that.
And in credit union land in the U.S., quite a few credit unions are running cores that are 40 years old.
Oh, yes. Yeah. And majority. Yeah, exactly.
These are not really flexible tools that weren't designed to have all this stuff plugged into them. They were essentially closed systems.
Yep.
Where the developer, the company you bought the core from, had little plug-in things that allegedly worked. Yep. But it wasn't really open for other stuff. Right. Thus the birth of very expensive middleware projects to plug stuff in.
Yeah. And the core companies have done a decent job of building the middleware. But again, the middleware was not built to be a connection to, 30 different fintechs that you now have a contract with to do all kinds of different things, right? It was not built for that. So we're sort of stretching the capabilities of some of these systems by trying to do the things that we're trying to do from a technology standpoint.
Well, what you're saying is fundamentally scary. I think what you're saying is true, but it's fundamentally scary. Someplace on Backbase, the company claims that pure fintechs like Chime are in much better shape because it's all new technology, and they can do this personalization stuff. They can do it today because they were built to do it. They, absolutely built to do it.
Yep.
Whereas the credit union running a 40-year-old core, personalization consisted of the teller smiling at the member who came in. That was personalization. That doesn't exist anymore.
Right. Well, it used to exist in that. I remember long ago going with my dad to the bank, and the branch manager knew my dad, right?
And your dad probably had a favorite teller. I mean, I'm an old guy. I had a favorite teller.
Yeah,
and if you ask me what made this teller special, I'd say, I don't remember. I had
And they knew you. Then they were part of the community. They knew who you were. They knew their kids. That doesn't exist in the vast majority of the banking world. I mean, that still exists, particularly in small towns and particularly with credit unions. But the members are not out there engaging with banks or credit unions in that way anymore, right? They're not going to the credit union regularly. So, if you go to the credit union once a year, the manager there is not going to know you because they've only seen you once a year. They're not going to remember you a year from now. So all of that is gone away. It's just, it's just a change in society and how we interface.
And yet the paradox is that, and Backbase says this, I agree with this, the consumer wants personalization.
Yep.
I mean, that's the paradox. The old way of delivering it in financial services doesn't work anymore. You got these new guys like Chime that say, hey, digital, we can do it. And then that leaves the traditional financial institutions struggling to try to catch up with things that were purpose built to do this.
Yep. Yeah, but personalization, means something else now, right? What it means to people is the Netflix type of personalization, which I find kind of funny because I don't find Netflix necessarily very personalized. And we always use that example. Yes, Netflix tells me, hey, you watch this movie, maybe you should watch these movies, but half of those, either I already watched them and Netflix knows I have, or I'm not interested one bit, right? Just because I'm interested in this one comedy does not mean I'm interested in every comedy, right? And so it's kind of like really rough personalization, but that's sort of the personalization that we've gotten used to. Amazon is always offering me products to buy. Half of those products I already bought. So it's not really great personalization. It is really the promise that we're going to get something so unexpected. And it happens every once in a while that you go, oh my God, it's like it's reading my mind, right? On the other hand, banking products and services are not anything like what we get from Amazon or from Netflix. And so I think personalization should mean advice given by your main financial institution that is contextual, it's action-based, and it's bite-sized. So don't give me a 3,000 word blog on how I can save money to buy a house. Give me something that says, hey, remember you want to buy a house? Maybe you shouldn't buy this expensive computer, right? You're supposed to be saving, right? To me, that's way more appropriate than just trying to sell you the next product. Which is what we wound up doing from the banking side of the world and not from the customer sides. So I think personalization is going to get to that place soon, but it's not here yet. And I bank with, I don't know, I think I have 6, 7 different credit unions and maybe about 10 different banks. I don't feel like there's a level of personalization for particularly the ones that I use, that I truly use. I don't feel it. I don't see it beyond things like out of, what I said, like 15, 16 different financial institutions. Only 3 of them wish me a happy birthday the last time I had a birthday, right?
Do the credit unions sell you less than the banks sell you? And
yes and no.
The example I give people, and I knew very well the CEO of one of the country's biggest credit unions. And I asked him, I'm working in your auto sales. And a member comes in and says, I want to buy a 7 Series BMW. And I look at the person's credit, et cetera. And I say, no, what you really want to buy is a $20,000 Hyundai.
Right.
You can't afford that 7. You will be able to pay for that 7 Series BMW, but your children will starve. And I said, what would you say to me? He said, I'd pat you on the back and say you're a good credit union person. Whereas at Chase, they'd fire you.
Yeah. Oh, yeah, of course. I in banking, one of the banks that I bank with is Chase. And Chase
I think Chase is masterful. And man, the amount of money they've spent on technology is just awesome. The people have hired really, really, really good.
Yeah, I'm a Chase customer only by default. I bought a house. I got a mortgage from a mortgage company. Eventually, that mortgage was sold 2-3 times. Eventually, landed in Chase. So I'm a Chase customer because of that. But once I became a Chase customer, then I opened a couple of accounts just because I want to know how it works, and it's easier to open an account. I don't feel that they understand me very well. Like I said, I have a mortgage with Chase. I get so many messages from them about getting my next mortgage. It's like the only thing they know. Hey, you have a mortgage. I also have a credit card with them now. And so there's enough activity going through that they should at least have some inkling that I'm not just a mortgage buyer, that they should be sending something else. And it's always like, hey, here's a discount on your next mortgage. you know how long I've had this mortgage. Do you think I'm going to buy a house already? It's weird to me. So I don't think Chase, even though it's held up as having a lot of investments and so on, is doing that great of a job. We also talk about Bank of America and Erica, their chatbot. That chatbot is not fantastic.
Yeah, well, that's like a 15-year-old product.
Yeah, it is. Yeah, it is. But you hear B of A touting it and announcing how many users they have, and that's sort of the pressure that then if you're a digital person in a credit union, your CEO says, "Hey, what are we doing about chatbots? This Erica thing. 80% of Bank of America customers are using Erica. Why don't we have something?" Right? And the head of digital at a credit union is like, "Well, okay, I'm going to be looking into that," but it is not what the PR says. I don't feel it. I don't see it. My main bank is another bigger bank that invests a lot in technology. I don't really see it that different from anybody else that I do business with. So I just don't see the industry being any good at personalization yet. It's going to happen. It's going to come. There are tools out there that we and other people are working on that are going to get us there. But anybody who thinks that, oh my God, I'm a $300 million credit union and I can't compete, you're wrong. You can compete. You just have to figure out who are your real partners, who can you really work to get there. And it's a matter of you're going to be swifter than a B of A or a Wells Fargo or a US bank.
Oh, I tell people a true story. This was probably 15 years ago. One of the biggest banks in America did not yet roll out mobile remote deposit capture. Mm-hmm. I talked to a very, very senior guy, and he said to me, here's the deal. I could turn on a switch and deliver it to 70% of the country tomorrow.
Yep.
But the whole Southeast, which was a merged entity, they bought a bank down there. I can't turn it on there. I can't announce it works every place except for Florida, Alabama, Mississippi. I can't do that.
Right.
Now this was all off the record. He did not want his name associated with this, nor have I ever identified the bank, but it doesn't matter. These, as you said earlier, these big banks have done a lot of mergers. They have a lot of different cores running. What they can do in San Francisco isn't necessarily what they can do in Austin, Texas.
Yeah, particularly, yeah. When you're running, I mean, I work at B of A for a little while, and just as you were saying, the at that point, the California bank, quote unquote, the original Bank of America had a different core from the bank that was out of North Carolina, right? Which was
wow. Yeah, I didn't know that.
It hadn't yet collapsed into one. And I was a former Fleet employee, so the Northeast, which was the Fleet footprint, had a different core. So we were running 3, maybe 4 different cores. And so just as you were saying, right, you wanted to roll out, you could get everything that in one of those cores, but not the others, right? So you couldn't say, hey, this is across the country. So exactly as you were saying. And to me, I think one of the things that smaller community-based organizations, both community banks and credit unions, can think of is they really are they could be very swift. They can make decisions very quickly if they want to, way quicker than in other places. I work for a large regional bank, and our technology spend decisions were done by a committee. When I worked at a community bank, we could make those decisions very quickly because it was not going to be a committee. It was going to be the CIO. And as long as the CFO was supportive from a financial standpoint, we could go and do whatever we wanted, right? And we could make those decisions very quickly. We at a large regional bank, we couldn't do that. And I see credit unions that want to move quickly. They can move very quickly if they have the capability and they have the right people. And it all comes down to how fast do you want to be, and are you willing to take a certain level of risk to make changes? And it's a calculated risk, right? It's not like, hey, we're gonna put $6 million into blockchain and see what happens, which we actually see big banks doing that. It would be more of, there's a technology that's already tested, that's already running elsewhere. Why don't we use it? And maybe we use it, as a proof of concept and see where we go with it. We certainly see banks and credit unions of smaller size being able to do that.
You're actually offering an extremely positive message for mid-sized and smaller credit unions.
Yeah.
Where on the one hand, I could see I'm a CTO at a mid-sized credit union. I look at Chase and I say, hey, man, I just can't even fight with that thing. And you're saying, well, actually, you can. You just have to pick your target.
Yeah. Yeah. I like I said, I worked for B of A for a while. And one of the things I was astounded when B of A acquired Fleet, where I worked, I got to see how they function. And in some places where you thought that everything had been thought out, that everything was working swiftly, a lot of that stuff was being made up of just having a ton of people making it happen, right? What we used to call the sneaker network, right? Where it wasn't really systems connected to each other. It was just a whole bunch of people that made it happen and made it look like it was working appropriately. Whereas in a credit union, you could automate some things much faster and you're in a better position because, again, you don't have to deal with committees. You don't have to deal with the amount of silos and politics that are in a really large organization. A few years ago, I worked with an organization that they hire a new head of mortgage. And he said, hey, I don't want to deal with the rest of the bank. So I'm moving the mortgage company to another state, and I'm moving to a different core. And he pretty much just built his mortgage company outside of the technology stack for the bank. That's possible in a big organization. That would not fly in a credit union, right?
No.
Right. You're like, no, we are all here for the member. And the member that you're selling a mortgage is the same member that has a share account. So you don't do that, right? And the ability for a credit union to move quicker is there if they want to. And there's many credit unions that are in that space. You and I can probably name some of them because we know how quickly they move. You have to have the wherewithal to do it,
And you have to have the commitment from the executive.
Yep.
Excellent. I know one credit union, a couple $1 billion, not a giant, but not tiny, that by mid part of this year had already put all their the customer facing manuals into an AI document, and their call center people were using it with great satisfaction. But that's because a very, very high level guy ran that project and he wanted to make it happen.
Exactly. Yeah. I mean, that is just such a prime place for that. Because, if we go back 15 years, and I ran a call center for a while, we would have this idea that, hey, if we can take everything and put it into one place, we could get all the answers that we would need to serve our customers. And that became the CRM. Okay, we're going to put everything into the CRM. That never worked. CRM was built for sales, was not built for service.
The leader in that business is Salesforce, and the name kind of tells you something.
Yeah, exactly. Yes, even the name of the company tells you something. Exactly, and so I a couple of years ago I worked with a larger credit union, and when I met with the contact center head, he told me we have to sign to 24 different systems every day to be ready to serve members when they call. When I ran the call center, it was 14, and I thought that was a lot, but 24 was a even more ridiculous number. You're expecting an agent at a call center to be able to not only navigate through these 24 different systems, but to be able to understand all the products and services and all the regulations and or rules of the credit union as you serve members. And yes, 80% of the questions you get are rote questions, things that they can easily look up and answer and solve. But that 20% is the problem, right? So how do you do it? And so their response was, well, we train people. We continually have this training, right? But if you get trained on things that you never use or you rarely use, you're never going to remember that stuff. So you stick it into some sort of manual that, sits next to you, and then you flip through the manual if it's physical, or you go through a keyword and look at it. A lot of those tools don't always work the way you think you want to. But with AI, just as you were saying, I mean, that's a great application where you ask the question just like you do with ChatGPT or Google AI or any of those, and it gets an answer. You also do need the ability to be able to figure out if the answer makes sense or not. 99 times out of 100 it's going to work, maybe a bigger number. But and while you do that, you could also think about how the agent is teaching the tool, or could be teaching the tool, and therefore getting it better and better as it is used in the future, right? And eventually it'll get to a point where you might be able to turn it around and provide that level of resolution through a customer's facing tool. So that's coming, and it'll be there. It'll be here. It's just not here today.
Well, some institutions do have it here today.
Yes.
So it can happen.
Yes.
Is there anything else you see that is happening now in the AI world?
Yeah, the other thing I've seen it, and it's more employee facing as opposed to.
There are a lot of projects that are employee facing. That makes perfect sense because the institution quite correctly perceives less risk.
Yeah, and there's enough stories out there of chatbots that are open to customers in other industries that are getting wrong answers, right? There's been a few stories. There's the Air Canada story where a customer got the wrong answer, then they sued and they won the case, and then Air Canada had to pay, and of course they had to take down their chatbot because of it. Those stories are there, but if it's internal, the risk is less, right? So the other thing that I've seen is more in the wealth space. An advisor can get some direction on advice, maybe looking at the portfolio of the client, and make some suggestions. Again, the advisor is a licensed advisor. They're going to understand if something doesn't make any sense. But again, using the power of AI to be able to look at each person's portfolio and be able to give advice. So the other piece where we're actually, we at Backbase are working on is in the wealth space, again, giving customers a small, short description of what happened in the market the night before and how it may affect them, right? So, that blurb that you would get maybe as a monthly letter from your advisor, you could get that every day that is being provided by AI, right? It's not actually making any claims of what you should trade or anything like that. It's just giving a summary of what happened, right? Lower risk, but that's customer facing, right? So we have that capability today for our wealth management clients. And it depends. Some clients don't want anything like that. Some do. Some want to have certain limits, some guardrails, and say, okay, I don't want that to be shown every day. We want that, once a week, whatever. But the capability there exists. The other thing I hear is people trying to apply this idea of generative AI, large language models to fraud detection as a second level of AI that's looking at activity. But from what I hear, it's refining the tools that are already using predictive AI, catching fraud and things like that.
Well, I think the guiding force there is the belief, which I believe is true, that the criminals are using AI.
Yes.
And if they're using AI, you better arm up and use AI to defend against them. Exactly how you do that, that's where you earn the big bucks.
Yeah. Exactly. Yep.
But it makes sense to me that these criminals are using AI.
Yeah.
I mean, I get so many LinkedIn invitations from pretty young women who say that my post just thrill them.
Yes, you're a catch.
And my heavens, I'm just so thrilled by this. Now I'm convinced it's all one computer in Leningrad.
It's
run by a guy.
Yeah, it's funny because it's actually a ring from what I've read, and if you fall for it, somewhere along the line, you may actually even get on the phone and you're talking to a woman, right? But who knows? How that works. It could also be a guy with an AI voice and make it sound like a woman. Who knows? But what they say, though, the blurbs that they send have gotten better. It used to be that scammers, you would know that it was a scam because they spell things wrong. The grammar is terrible. You're like, yeah, this makes no sense. This is definitely a scam. Now they're getting better. It's still not perfect, but it's going to get to the point where you're going to be falling for it because it just sounds like a communication from an appropriate area. And we already have cases of people spoofing family members' voices, and you get a phone call from a phone number that you don't recognize, but all of a sudden it's your son saying, I'm in college, I need more money, and can you send it here instead of the usual account? And so people are falling for that sort of thing because the voice is the voice of your child or your family member, right? And all of that's done through AI. As they get more sophisticated, our tools need to get more sophisticated, and we need to get more sophisticated to understand what could be a scam and what could not be.
Well, there's actually a growing sense in financial services that, for better or worse, the consumer wants the institution to protect them.
Yes.
The consumer doesn't want to have any responsibility.
Right.
And there are forces in CFPB that support that idea.
Right.
Whether CFPB changes or survives the next administration, I don't know. I don't have that crystal ball yet.
Yep.
But so I know a lot of institutions were scrambling, thinking that it was incumbent upon them to protect you, the member, from your own idiocy.
It's a skills race here, right? It's a race between the scammers and the rest of us. How do we tool our clients with the right tools? And at some point, it's going to be AI versus AI, right? We're starting to get there.
Yeah, I think we're definitely getting there. I think I got what I wanted. Do you want to say anything else about Backbase or anything really?
Yeah, well, just a little more, just to explain what we do. So we're a digital experience platform, meaning online banking as well as apps. In addition, we're an omni-channel, multi-segment solution. So not only do we provide the customer engagement side, but we also provide the employee engagement side. So, our call centers, operations, even the branches can use our platform for account opening, for servicing clients. So when we talk about AI, it's like, hey, how do we put AI into a lot of these things? And we cover, retail through retail, small business, middle market, commercial, as well. We're trying to figure out how we provide that level of experience that customers expect, because they expect it, given that they deal with, Google and Apple and Amazon from a customer experience, but at the same time also be able to allow a bank or a credit union to make those experiences their own. So if you look at some of our clients' experiences, they look very different from each other because each organization prioritizes and has a different strategy, and therefore that's how it's going to, show up to our clients.
Cool.
Or the ultimate users of the system.
Before we go, think hard about how you can help support this podcast so we can do more interviews with more thoughtful leaders in the credit union world. What we're trying to figure out here in these podcasts is what's next for credit unions. What can they do to really, really, really make a difference in the financial scene? Can't all be mega banks, can it? It's my hope it won't all be mega banks. It'll always be a place for credit unions. That's what we're discussing here. So figure out how you can help. Get in touch with me. This is rjmcgarvey@gmail.com. Robert McGarvey again. That's rjmcgarvey@gmail.com. Get in touch. We'll figure out a way that you can help. We need your support. We want your support. We thank you for your support. The CU 2.0 podcast.